Hello, guys and gals. Today is Monday, March 11th. This will be today's edition of my YouTube channel. You see my paper trade account showing. Um, it's kind of going the wrong way. I was at a little over 7,000. I know I had the Tesla stuff expire last week, which didn't help, but um, I gotta get this back on track here. Um, wasn't too much today. I had a pretty hectic weekend, and a little bit busy today with work, so I didn't do a lot as far as trading goes. But I wanted to make sure I got a video out today. Um, I entered CGC credit spread the other day. You see that's doing well. I have a buy, a close order, which for a close order I'd be selling the one that I bought and buying the one that I sold. Um, I'm looking to buy it back at $450 per contract. I sold it initially at $550 per contract. So it'll be about $100 profit. You see right here is my entry. I sold at 187, bought 122. That's actually 65. So I sold it for $650 per contract. Looking to buy it back at $450 per contract. So um, looking for maybe today that might close. You see right now we're at about 57 cents. So I still have about 12 more cents to go for it to drop before I buy it back. Uh, SMH, which is the chip sector, um, I entered that one in 51 cents. Looking to close it at 35 cents. And these are about 30 cent, or I'm sorry, 30% of the maximum profit potential that I look for in these. And when I say that I look for, um, I'm following these trades based off of um, a moderator in the Traders Council chat room that specializes in option spreads. Um, I'm following him. I'm not choosing these myself. So I'm following him just to learn a little bit about it and play along and see how it goes. So I can't take credit for any of these. He's has a pretty high success rate at these. The SMH, it's not looking pretty right now, but you see they're the 106 and 108 calls. It's only trading it at 103.22, so um, we're still not in too bad a shape with a long time left on them. Um, we'll keep an eye on it and see how it goes. New beverage, well, and it's actually went up today because it was a little under $5 Friday. It's showing that it's negative for the day, but that's just kind of how the numbers kind of play out. If we take a look at the new beverage chart for today, you see it's actually up. It closed Friday right around here, around $5, 505, and we're trading now at 533. So it's up, but if you come over and look at you look at the options chain on it for the particular contracts that I'm holding, we're way down here. You see that the bid is 895. Something's not right here because that's definitely. Oh, that's because we're on the verticals. Let's go back to single. Okay, the bid's 85. The ask is $1. Um, the last is $1. I paid $2, I believe, on these. 225. So, yeah, they're not looking pretty, but there's still 9 months left on them. Uh, Let's take a look at, let me minimize this, or not minimize, but close that so we can take a look at the SPY chart today. SPY kind of took off out of the gate. And I actually, Friday in our chat room before the close, I kind of called it. I said that barring any bad news, I look for green today. And that was basically because of the candle that we closed with. If you take a look at the daily chart, we had a pretty good bullish candle here. There wasn't really any particular level that we bounced off of other than something I'm going to show you here. Let me see where it's at. That was, what was the lows here? Lows 272.42. If you look back here, I gotta find it now. I have it marked on my other chart. I probably should mark them on here too to make it a little bit easier. The low was right around here, 272.42. And back here we had a gap. Our low was 272 there, 274. We had a gap here, and we were right. Let me check my other chart so I can find it, kind of pinpoint that, because I think it's kind of important that you see it and see what I was looking at. And a gap is also called a if it's a gap up, it's called a rising window. If it's a gap down, it's called a falling window. On February 12th, let's go back to February 12th right here. I don't know why that candle is looking funny. It's looking more like a line. So I don't know why it's doing it on this chart. But February 12th, we had, yeah, this is something definitely wrong with this chart, because we're showing an open at 272.11, and we actually opened at 272.42 that day. So I don't know. I'm looking at SPY 1 year daily chart, the same chart that I'm looking at on my other screen. Let me try changing this chart to something else and then going back to it. Maybe it'll refresh it. Yeah, it's still not. Anyway, if you look at the February 11th candle, actually the February 12th candle, the low on that candle, at least on my other chart, on my real trading account, is showing a high of 274.52, or 272.42. We're showing a low of 272.34. And there's a window right there. That was the low of the day. The high on the February 11th candle is 271.49. The low on the next day was 272.34. So we have a window, a gap in between there. Gaps usually offer pretty good support or resistance depending on which way you're going. With the low of the February 12th candle being 272.34, we came down pretty close to that Friday and tested that here. We only had 8 more cents to go till we hit it, so we were real close to testing that, and that's what I was looking for. I was looking for support level there. Now, yeah, sure, we could have fell through it, which is very possible, but when you have a big green candle that we bounced kind of right off of it, I kind of thought that we might see green today. Also, the stochastics were starting to curl up a little bit. So you see, if it looks like we're probably going to have another gap here, because the high Friday was 274.65. The low today 275.23. So we'll have a gap here. So this should offer some support also when, if we get to that point. Anyway, Friday in our chat room at the end of the day, I did call for green today, barring any bad news. So, such as China trade or North Korea, anything like that. I didn't see anything that was too significant, so I called green today, and so far we're looking good on that. Let's take a look at the 5-minute chart. I didn't make any other um, paper trades today. Didn't do any SPY scalping with paper trades, but I did make a real money SPY scalp this morning. I entered it right at the open, and I have a screenshot of my entry and exit. So just to show that I'm not gonna sit here and tell you, hey, I did this. I made $6 million today. If I made money, I'm going to tell you I made money. If I lost money, I'm going to tell you I lost money, and I'm going to be transparent. Um, you know, I'm not this super trader that makes money on every trade, and I'm not going to try to sit here and tell you that I am. But I made money today. I bought right after the open, right about at this level, and the reason for this was, you see, we had a pivot point right here. This yellow line is today's open. I don't put a lot of significance into that at the open. Later on during the day, yeah, I might factor it into something, but right at the open, I don't put anything into that, because if it opens here, it's going to go one way or the other. It most likely, I mean, 99.9% chance it'll go one way or the other. It's not going to just stay flat all day. So it could come up here and then fall down. Happens a lot. But I just kind of thought that we were going to see green today based on my comments Friday and what I just showed you. And we open right at a pivot point. So here was my entry. Let me zoom in just a little bit on here so you can see a little bit better. Small entry, base hit. I entered at 9:30 and 40 seconds. So I entered shortly after the market opened, and you see I only went in 3 contracts just because I wasn't 100% certain. I wanted to be safe, but I went in 3 contracts. I bought Wednesday's expiration, March 13th, 276 calls. I paid $1 each, so I spent $300. So I entered it right after the open. 40 seconds into the open, I entered. I sold one at 9:32, sold one at 9:33, and sold one at 9:37. My selling prices were $1.05, $1.12, and $1.15. If you do the math, that works out to an average sell of $332. So $32 profit on $300 entry works out to just a hair over 10%. So I made a net 10% overall on these trades. I'm happy with that. Like I said, if you can do 10% every day, that's awesome. So let me break this down to a 1-minute chart so we can get a little bit better idea of where I entered and exited. So you see I entered right at the first, right at the open, almost as soon as we opened. I entered right here. My first exit was 9:32. So my first exit was right about the beginning of this candle. My second exit was 9:33, so about the beginning of this candle, I exited this one. And the last one was at 9:37, which was right at the open of this one. We opened and we started to pull back a little bit. I didn't know how far we would pull back. I was afraid we'd pull back too far. I didn't want to take that chance. I watched it kind of sputter around right here and didn't do much. And I said, okay, I'm going to get out, take my money and run. Obviously, if I would have held it longer, yeah, oh well. Um, if I knew it was going to run all day as long as, obviously, I would have kept all of them. I would have bought more. But we don't know that. I don't know if it's going to come to here. What I exit at 9:37. So if you look at the Yeah, 937 was my last one. Let me zoom in a little bit. If you look at the 937 candle, that was just after this one closed. We were coming up on a pivot point. We came up the beginning of this candle. We opened right here at 935. We started coming up, probably pulled back a little bit and then went up. But we were starting to get close to this pivot point. I got enough profit for me to make me happy. Sure, it's not a lot of money, but base hits. Like I said, naturally, if I would have held on to it a lot longer, well, that would have been even better. But these are the actual calls that I was in. And this is the 1 minute chart. So we can see here, I entered right at 9:30 at $1. Exited the first one, what did I say, 9:32. So the beginning of this candle, 9:33, the beginning of this candle, and 9:37, which was the beginning of this candle. You see we pulled back to $1.11. I was just trying to get 10% total. So I did that. I accomplished that. I did look for further entries, maybe make another trade, but I was going to be pretty selective about it. There wasn't really any good opportunities that I saw. I'm not going to enter here or here just for the sake of entering. For one, we're not near a pivot point. We're not near a support level. Sure, we have 277 mental support, but I don't enter just based off a mental level. I may exit on a mental level, but I'm not going to enter on a mental level. We kind of rode this 3 EMA. Right here wouldn't have been too bad. Now, if I was being a little bit more aggressive, I could have rode those calls up until we saw this. We had a bullish engulfing candle here. You see bullish engulfing. I could have rode these calls till we saw this pullback, this reversal signal. To me, that's not a reversal entry. Number one, we weren't near a resistance point. But number two, as strong as it was this morning, I'm not going to enter puts on this. I'm not going to play a pullback. I'm not going to play a reversal. I'd play a pullback when we came back down and jump back in calls again if it's at a significant support level. We never reached that. For one, I was out to lunch at this time. I was away from my desk, so I didn't even see this. I don't think I would have entered it anyway. The only support that we had was this 10 EMA. I'm not going to enter a trade just based off of a moving average line in itself. But this wouldn't have been too bad of an entry here. With the calls I entered, you would have entered the open of this candle at 11.55. Let's take a look and see what kind of price action that would have given you. 11.55. So you would have entered at $2.30. You would have made it to 2.43. Then pull back to about 2.15, and you could have made it up to 2.60. So you could have got 10% out of it if you would have been patient with it. It wasn't, like I said, I wasn't at my desk, and even if I was, that's not strong enough of a support level for me. Sure, we had a couple candles that closed in here, so it was holding this support level, but like I've said in my other videos, I like to buy near support levels, or if I'm playing puts, near resistance levels, whether it be a moving average line, a previous high, previous low, something. Right here we were right between. The only real support resistance we had here were these two pivot points, and we were kind of right in between them. You remember I said last week in one of my videos, if you get let's say a hammer candle, doji candle, whatever, if it's right in the middle of a channel, it doesn't have that much significance. At least to me it doesn't. Hammer or doji down here or up here, yeah, they have a lot more weight. right in the middle, and I consider this the middle. Right in the middle, it's just not worth the risk to me. The kind of plays I do like, and I'll point this out. We didn't see this today, but you see this moving average line here. This is the 100 simple moving average line. Right where it crosses, right here, crosses this pivot point. If price would have pulled back, if we would have pulled back and came down to here, and if I would have seen some type of reversal candle, whether it be bullish engulfing or a piercing line, or even a doji candle, at that level, I would have, without a doubt, I would have went in calls right there, um, because we have two different levels of support right here, and we show a reversal candle. I may have even entered this even if we started showing some long tails and not even a specific reversal candle. Just something with a long tail and some volume coming in. I probably would have entered it there even without showing a reversal candle. Um, so that's what it, that's kind of the stuff I look for. Right now we're up near a pivot point towards near a reversal. Let me zoom in here. We're close to a reversal. This pivot is at try to see the actual. I pulled up on my other chart. It's a little bit bigger monitor, so it's easier to see. 278.30. So the R3 pivot is at 278.30, and actually we're just hitting that right now. So we'll see if we break through it. We're approaching that. If we see a reversal candle, we may see a shooting star. We may see a doji. Doji's not a reversal candle. Doji is an indecision, impossible reversal. We may see a reversal candle here of some sort, dark cloud cover, bullish engulfing, something, shooting star. I will not be entering puts on that. We're up too much today, too far. The market's too strong. I'm going to play the trend. I won't play puts on this. What I may be interested in would be a play off of a pullback. If we come back, if we pull back to really, I don't know, maybe a 278, but I that's not, it's not worth it for me to enter like a 278 level mental support. We'd have to pull back to a moving average line or something, and there's no moving average lines near here. So the only other thing I see that might be support, like I said, we have 277.95 ish, 288 right in there, or 278 right in there. We have some prior, these lows here for a little bit of support. We also have some down here. I'm not going to enter on those, so I'm likely done for the day. Just not gonna risk it. Like I said, I'm a conservative trader. I take base hits. I don't play out of my comfort zone. So that's what I look for. I haven't looked at any other charts today, but let's take a look at I don't know. Let's try Apple, and it's the first time I'm seeing this chart today, so I don't know what it looks like. Usually it's pretty similar to SPY, usually, and yeah, it is same thing. You know, looks pretty much identical actually. See how we came right to this pivot point and we stopped. I love pivot points. Right to the pivot point and we stop. You see here we opened right at a pivot point. So we played from this pivot up to this pivot. Right now we're just kind of we're testing this. We've tested it once, we've tested it twice. Looks like we might try to test it a third time. Will it break through? I don't know. We'll have to wait and find out. Let's take a look at Netflix. See what it's doing. Pretty similar. We did have a pullback at the open. You see this here, this level is yesterday's high, or actually Friday's high. The green line is Friday's high, which was right here. So, and you notice Friday we stopped right at this moving average line. We got to that, and that was it. We stopped. So we look at today's. We came down to yesterday's high. We bounced back up. I wouldn't have entered on that. For one, I don't. It's only one level of support, or yeah, one level of support. I don't. I like to see another level there, whether it be a pivot point or a moving average line, but we didn't have it. Also, um, up here we have bearish engulfing. I wouldn't have entered this because my stop out, actually my stop out would have been here at the highest of the two that formed the bullish or bearish engulfing, and my target would have been here. I would have had to enter at the open of this candle, which was down here at this pivot. So that wouldn't have been a good entry for me. Right here we had a bullish engulfing, but we're too close to the pivot with no support below. You know, not much, not a lot here that looked pretty. Now this wouldn't have been too bad, but I like to play candles. I'd rather play reversals. I don't do as good on breakout trades. I know some people, that's their bread and butter. They like to play these breakout trades, and they make it work. Seems to me when I try to do a breakout trade, I would have done this. This is what would happen if I do a breakout. I do a breakout, it breaks above that pivot point. I would have entered right here, and look what happened. Now, eventually, it would have worked out, but it just never seems to work out for me. I like reversal trades. I'm just better at spotting them. Just seem to have better luck with them. But now, if we would have pulled all the way back to this pivot point here and shown some type of reversal candle, that wouldn't have been a bad entry for me. I would have considered that. So, yeah, that's I said it's just kind of the stuff that I look for. It's kind of the stuff I look for there. I just send a quick text. My son's actually just getting on an airplane heading to Houston for work. So he just sent me a text. He's on the plane. But yeah, that's I liked at least two levels of support. Resistance, I don't. One level is enough for me. I don't even need a level. I just need to show some slowing and momentum, and I'll exit a trade. But to enter a trade, I need at least two levels of something. It's so that's probably about it for today. Like I said, I knew it was going to be a shorter session or shorter video. I didn't do a lot today. I would have jumped into another SPY trade if I would have seen a good entry. But like I said, we just kind of took off this morning and never pulled back. I would have liked to have seen, maybe right here, we would have pulled back. This is kind of what I was hoping for. Right here, we get to this pivot point, we start to sell off, we pull back, and maybe right about here, we hit this pivot. This would have been excellent. We would have had today's open and a pivot point and the simple moving average line, all three as a support level. I would have jumped on that. That's what I was hoping for. That's why I only went in 3 contracts here, because I thought I'll make a quick $30 here. Just something small, just so I'm positive for the day. And then if we would have came down here, I was looking at her a little bit bigger, maybe 5-6 contracts, get a bigger entry, play 10%, end up with about $100 a day at the end of the day. Maybe even more depending on how it would have played out, selling along the way. And again, get a hold of your broker and get your fees changed. Work something out with them. Get your fees changed. I do not pay a base rate. I pay a per contract rate, so it doesn't cost me any more money if I sell all 3 contracts at once, or I sell 3 contracts one time, and one at a time. My fees are the same. If I had to pay a base fee every time I sold one of these contracts, I wouldn't be able to do the trade the way I did today. And that's kind of what made things work for me. I'd be forced to hold all three contracts till I got to a level that I was satisfied with, and then you take the chance that it doesn't work out, and now you're selling them for a loss. I sold one with a 5% profit. It was only $5, but at least I lessened my risk just a little bit. Took off some of that risk, so now I only had two contracts to worry about, and I'm up $5. If I would have sold that one for a $5 gain, and the other two I end up selling for $15 loss, I'm only down $10. Um, and we're talking small dollar amounts, but this applies to any level. Sure, if you're playing, you're going into an entry at $2,000 per play per trade. Yeah, that $5 base fee doesn't mean as much. Then you could sell it in three different parts and pay the $15, and you're okay with that because you're going to make 200. But when you're trading a smaller account size, uh, that's crucial that you get your fees. Work with them on your fees. I know it took me a couple of times of contacting TD Ameritrade. I know the first time I talked to them, they had no problem lowering my default fees. I think default is 6.95 plus 75 cents per contract. I think they had no problem lowering it to 4.95, and I think they went 4.95 and then 50 cents per contract. They didn't give me any issue at all doing that. In fact, I did it on two different accounts. The second account, I didn't even call them. I went up here to support chat, and the reason why was because I had a separate question for them. I came up in here, went to live support, create support request, and I asked them something separate. And after we finished that problem up, I said, "Hey, is there any way that we can do something about my fees here?" And the guy says, "Sure, I can drop you to 4.95 per contract and 4.95 per trade and 50 cents per contract." Awesome. Next day, it was changed. Uh, no hassle, no haggle, nothing. That account I don't trade very often out of, so it's still at that level. But my real money account, or my real money, my other account, I have two accounts. My other account is more active. I do more trading in that one. I called them back a second time a couple months later and said, "Hey, you need to work with me on these fees because I'm making you more money than I'm making me." and and he did look back, and he said, made a comment about the amount of trades I've made, and said, "Wow, yeah." He said, "How about if I put in for this?" He told me, he was up front. He said, "I don't have the authority to approve this, but I'll put in the request for it and run it through my bosses. Let them look at it." And it was about maybe 3 days later, I got a message from TD Ameritrade saying that we didn't get the level that I was asking for, but we were able to waive the base fees. Um, and right now, I pay 75 cents per contract. That's all I pay. No base fee. Um, I may call them later and try to get it down a little bit lower. Um, I've heard of people that pay 30 cents per contract with no base. Um, I could probably get that, but yeah, I don't have any complaints or issues with 75 cents per contract. Um, yeah, maybe I'll trade this account for a little while longer, and maybe I'll call them back. Um, but either way, get that base fee eliminated. Now, I still have a base fee if I trade stock because there is no per contract. If I buy a stock, I'm going to pay 4.95 to get in and 4.95 to get out. Um, I don't think they're going to waive that, and I don't expect them to because it costs them money. So I'm okay with that. I trade out of a cash account. I do not have margin. Um, so I understand they make money on margin. I don't. I would never trade on margin. Um, but when you have a margin account, it takes a couple days for your funds to settle when you sell a stock. When you have a margin account, your broker is fronting you the money that is waiting to settle. So you're actually borrowing money from them while your funds are waiting to settle, and they make a little bit of interest off of that. Um, that's why they make money off of that. They'd rather you be on a margin account than on a cash account. Um, but if you're an options trader, I would trade a cash account. If you have, if you are a stock trader and you don't day trade, you hold overnight, margin account's better, in my opinion. If you're an options trader and you don't hold overnight, cash account's definitely the way to go. Um, your funds settle the next morning. I did hear somebody mention in the chat room, in the Traders Council chat room the other day, that they heard that TD Ameritrade is going to change that. And I don't know if it's TD Ameritrade or if it's FINRA across the board, that they're going to change it to you have to wait 2 days for your options fund to settle. I haven't seen that in writing, and I don't know how accurate that is, but it's just something else to think about if they do that. But if you are trading cash or are trading options and you're not holding overnight, you want a cash account. My account's cash. There's no pattern day trade rule with the cash account, but the requirement is you trade settled funds. They're not going to front you money. So if your funds are not settled, you cannot trade. Um, I trade a cash account. I can make as many round trips a day as I want as long as I have settled funds. Once I'm out of settled funds, I'm done trading. Um, I don't generally run out of settled funds. If I do, I probably over traded for the day and I probably lost money that day. So, and I don't go in for a full amount. Um, I go in generally $500, maybe $600 for my position size. Um, so I'm not using all of my funds. Um, it's just what I'm comfortable trading. I've traded larger amounts. I've went in for, I don't know, I think I've went in for $3,000 before on entries. And they're nice when you hit them right, but they're not fun when you hit them wrong. And going in for that amount, it does have some effect on me and how I manage my trade. So if you find yourself being affected by a little bit of a pullback in your trade, then you went in too big. Um, I know that my max loss is going to be around $50, maybe closer to 100, but I'm not going to lose sleep over that. So I know that that's about what I want to go in for, is about $500, because my stop's going to be right around 10, maybe 15%. So I know if I go in for $500, that keeps me in that range. Um, sure, I could go in for $2,000, but now that 10% stop, yeah, that might affect my decision making. So uh, until I'll work at it until I get more and more used to it. When I traded before, I had a much bigger account, and it didn't bother me as much to go in for a bigger amount because it was a smaller percentage of my account. Um, Trading this one out of a smaller account, yeah, it does kind of affect you if you go in too big. So I don't want I want the chart to dictate how I manage a trade, not my emotions. So that's why I want to keep it to smaller entries. And you can make decent money off it. You $500 entry, you get a 10% gain. It's $50. Remember what I said before? $50 a day. That's $1,000 a month if you can average that. I don't know anybody that doesn't need $1,000 a month or couldn't use $1,000 a month extra. So, and again, today I was hoping to get another entry here. I was hoping we were going to pull back some. Maybe right here, pull back to this pivot point, or maybe right here, pull back to this pivot point. I was looking for another entry. When I do open trades right at the open, I do go in for smaller amounts because it's a little bit riskier. It's a higher risk when I go in right at the open because you don't know for sure what's going to happen. I mean, if you look at pre-market, we actually kind of looked like we were going to pull back. Look, we had 4 red candles in a row, and we actually lost this pivot. So if you just looked at pre-market right here leading up to it, it looks like we're going to come down and pull back. I was pretty confident we were going to have a green day today because of Friday's close, Friday's candle. But I knew it was a riskier trade, so I only went in for 3 contracts. If we would have been fluttering around here before the open pre-market and maybe shown a bullish engulfing candle right here that closed just above the pivot, I might have went in for more than 3 contracts. But it was a little bit higher risk trade, so I went in for a smaller size. Nothing wrong with doing that, and nothing wrong with taking a base hit. That's pretty much it for today's video. It ended up being 40 minutes, and well, I thought it was going to be about closer to 10, but I don't know. Once I start rambling, I just don't know when to stop. But anyway, that's today's, and you know, take a look. We'll see how tomorrow goes. I have a meeting tomorrow morning at 10 o'clock, so I might not get any trades in the morning with the market open at 9:30 and my meeting starts at 10. There's a good chance I don't do any trades tomorrow, or just a paper trade. I don't know if I'll get in a real money trade or not. But either way, I'll try to do a video tomorrow, and we'll take a look and see how the market looked. And again, today, yeah, it was great if you got in at the open. After that, there wasn't too many opportunities to do anything. So hope you learned something from this. Take something away from it. Hope you made money, and I'll see everyone probably tomorrow. Thanks. Bye.